Good morning all and welcome to this week's Jump Advisory recruitment discussion. As usual, if you can hear me, please put a hearty good morning into the chat box, or at least something that will amuse us all as we go from. Normally, as we start the webinars, I wax lyrical about some subject matter. Well, this week we're going to go on from where we started last week, where we're looking at discussing building blended businesses, where we have good contract, temp, and a good perm mix. And we got onto the conversation about the financials of the business. So this week we're going to look at financing the business and umbrella services, because we got an awful lot of questions about that after the webinar. So we've brought two experts in to help us to understand the complexities of gaining and changing your funding on financing your business and working with umbrella companies since all the changes in the laws and what we should do. So what I'd like to do is introduce first of all the people that are joining us today. So we've got Ashley Oliver, who's the co-founder and director of the Compass Group. He's got 12 years experience in the umbrella market. So if Ash hasn't seen it, then it probably hasn't happened. He's seen most of the significant change in the marketplaces. He co-founded Compass Group with a view of helping their clients to succeed by removing the risk, cost and admin associated with contingency workforce engagement, but also guaranteeing that all contractors are paid accurately, and that's really big at this moment in time, and on time and compliant with the legislation, the HMRC rules. So this actually is going to be a big area for you. I'm sure there'll be lots and lots of questions, so certainly get ready for those questions to come in. I'm also like to introduce Simon J. Simon, who's just announced that he's living in Wales, so he's just got his first drink in a pub, so congratulations there. But he's been helping recruiters save money by comparing the suppliers of factoring, invoice discounting, payroll, back office and funding, and he does that all for free. So brilliant. So if you've got that questions, then you can go offline, you can speak to Simon for free on that. So he's had a decade in this marketplace in financial solutions, mainly into the recruitment market, mainly in payroll and back office funding, factoring and confidential invoice discounting. And he's dealt with a range of businesses from just startup businesses to businesses with over 50 million turnover. So again, Simon's seen most things on this type of front. So likewise, I think he's going to get quite a number of questions about the small print that makes and breaks the growth of agencies, whilst looking at to understand what is an ethical ethical funder, if I could speak from there. Also, as always, we've got the house team from Jump in. I'd like to introduce Paul, Dave and Paul. Mr. Jacobs, the question to you is this week, we have questions from 1 to something. Can you count in order and keep them in order? That is the question.
Can't do that. You know that. It's asking far too much of a man of my age. It's just too much. Sorry.
Indeed.
Can't make any guarantees.
There is no guarantees. So as always, what I'm going to do is I'm going to flip-flop between funding and umbrella, and that's the only time probably this summer I'm going to be able to use the word flip-flop because of the weather. So what we're going to look at is the subject matter. So I'm going to kick off with Simon. Simon, welcome. Thank you very much for joining us. Opening question. How does funding work?
Yeah, Howard, thanks for having me. And yeah, nice to be on. Funding, I guess there's so much to funding for recruitment businesses, so many different options. But the main 3 or 4 are payroll or back office funding, people call it pay and bill funding, factoring, invoice discounting, and perm funding. And I guess they're probably the main 4 that recruitment businesses would use before anything else normally. And in summary, pay and bill funding is contractor being paid by the funder, timesheets, back office and payroll all being administered by the funder, and payments being made to the agency and to the candidate through the funder. So a one-stop shop of candidate gets paid, agency gets paid, client gets invoiced, all run by one funder. And then moving into sort of factoring and invoice discounting, although slightly different, in essence, a lot more of a step back and actually just access to capital through an invoice. So an invoice of a contractor invoice, 95% freed up front, 5-10% released once the client's paid, but the agency looking after all the back office administration, so making payments to the candidates, raising invoices, administering timesheets, and then there's perm funding as well, which releases capital against an outstanding perm placement, normally based on start date of the candidate, which we're seeing more and more agencies access at the moment just to get access to cash sooner than they would have before.
Is that becoming quite a big a big problem at the moment, certainly on the perm front, getting funding or getting payment from clients? Are you finding more clients asking for funding on the perm front?
I think when COVID kicked in sort of March, April last year, we had an influx of inquiries around perm funding because those clients that were paying on 7 and 14 days suddenly didn't. And there was a massive uncertainty around the payment terms base. Perm funding sort of has got bigger and bigger over the last sort of 2 or 3 years, just because that if you've got 30 or 60-day payment terms with your client on a PSL, and you can access that capital, I guess, within days of the candidate starting, you can put it back into the business and grow headcount, etc. So we're definitely seeing more of it. It's just making sure that the agencies that are aware that if they're accessing capital against a perm invoice and there's rebates involved, suddenly that capital that's sort of been released to the agency has to be repaid back to the funder at some point. And it's important to bear that in mind, that cash isn't there forever.
So one thing you mentioned there was, pay and bill funding, factor and invoice discounting.
Yeah.
Can you give us what is the difference between them all? So, because some people are on temp, some people are on contract, etc. And obviously we've now got perm funding as well.
Yeah.
So we can understand the difference between pay and bill funding and factoring and invoice discounting.
Yeah, okay. So the main difference, so keeping factoring, I think one of your other questions is the difference between factoring and invoice discount. So keeping factoring and invoice discounting in a similar profile. Pay and bill funding is a one-stop shop. So new start agency, existing agency that doesn't want to be running the back office. You have a supplier, you'll know a lot of the names out there, the Sonovates, the Simplicities, Zodex, etc. And they come and they sell in essence, they will do everything. So you would set your candidate up on their portals, you would set your client up on their portals, your candidate would add their timesheet in online, and then the provider would pay the contractor, the provider would pay the agency the margin, the provider would invoice the client, and the provider would collect the cash in from the client when it's due. And then normally 100% funded, which means that agencies getting their margin every week, but also contractors getting paid in full. So from an ease of actually calculating on a cash flow, you know that if you paid your candidate £700 and you're charging your client £1,000 and your margin is 300, you kind of get that 300 minus their cost straight away. And recruiters love this because it's just super simple, but it can be costly depending as you grow the business. So then where it moves very different into factoring and invoice discounting is that factoring and invoice discounting is really just releasing the capital against the invoice. So what would happen in this scenario is that agency would raise the invoice themselves through QuickBooks, Sage, Xero, etc. They would then, in essence, pass that invoice to the funding company who'd release 90 to 95% of the invoice value. That would then go back to the agency, and then the agency would make the payments. So the agency would either run a PAYE payroll, they'd either send the money to the likes of Ashley at Compass and they would make the payments, or if they were limited contractors, they'd pay them directly. They would then send the invoice to the client. They would then normally chase the debt back in from the client as well. So quite a lot more involved, but the difference in cost between pay and bill funding and factoring invoice discount is quite considerable, and it's weighing up that difference, which is why we see pay and bill work quite well at the smaller end, or the startup, or the few-year-olds, or a few £1 million stuff. And once they get to a certain level, if they can run it in-house, they normally bring it in-house and actually utilize a factoring or invoice discount facility.
Simon, what is that level, would you say, that where people sort of typically flip from one to another?
It's a really good question, and it normally depends more on sector than turnover. So if they're a very professional services-led agency, actually running the payroll and back office themselves is quite simple. So if you've got limited contractors earning £500, £700 a day, and you've got 5 contractors out, but you're invoicing 10, 15 grand a week, actually all you're making is 5 payments a month and raising 5 invoices. So we actually see startups in that sector often go straight to the factoring only if they get their head around the process, etc. Where we see them stay a little bit longer in the pay and bill is where they're the blue collar, industrial, construction, etc., where there's a lot more administration involved. So they utilize the administration of these pay and bill funders. So there's probably no straightforward answer, but I would say that probably all pay and bill funding, once it hits 8-9 million, it probably caps to the next level, but we normally see them move anywhere from sort of 1 million up to 5.
Brilliant, thank you.
So let's flip the conversation then, because obviously you mentioned there, Ashley, that's when they sort of be looking to sort of go to sort of an umbrella company or using umbrella companies depending on what their temps or contractors are doing. So, morning, Ash. What should you look for from an umbrella company at the moment?
Yeah, well, obviously there's a lot of noise around the umbrella sector right now in terms of how you engage and you pay contractors. And it was expected because on the back of IR35 that we just had, seeing a huge increase in number of contractors having to be paid either PAYE or umbrella. Now, umbrella is PAYE, but we get a full assignment rate, and I'll touch on that a little bit more. So we saw the scrutiny again back in 2017 on the back of the public sector changes in IR35. So we're now seeing a lot more noise in the press, whether it be obviously industry press, national press on the BBC about what does compliant look like, what do rates look like, what should it look like, and what does good look like when it comes to working with and engaging with umbrella providers, whether that's from an agency's perspective or from a contractor perspective. But the 3 key areas that I would always suggest any agency when looking to engage with an umbrella provider is threefold. First and foremost is compliance. That's key. You need to protect your contractors, you need to protect yourself as a business, but you also need to protect reputation and the risk towards your end clients with working with compliant providers. So compliance is by far and foremost the most important thing, but also transparency. And there's been a lot of noise around transparency in terms of what's my rate made up of? How does holiday pay work? Is our pensions being actually made into a workplace pension on me, or are they being taken somewhere else? But outside of that, you've also service levels. It's all well and good being compliant and transparent, but if you're no good at providing the service, or you haven't got the infrastructure and the tech behind you as a payroll provider, that's also no good to your contractors. A good umbrella provider, for example, will always be able to offer advances. So things always go wrong in the contractor supply chain, timesheets late, people are being missed off payroll, whatever it may be. All a contractor ultimately cares about is getting paid on a Friday, going to the pub when they can, when they're open, paying their weekly bills, etc. They're going to work to get paid first and foremost. So if something does go wrong, a decent umbrella provider will be able to offer what people call an advance or a prom note, promise to pay note. And it's things like that. So it's not just about the compliance piece. Yes, that is by far the most important piece. Transparency in terms of how my pay actually works, where my pay is going, what is being contributed to HMRC, what tax is being taken from me as an individual contractor, my gross pay, not the income that the umbrella provides, but also around the service levels. So, there's a lot to talk around umbrella. We could probably do, a whole series of webinars on it, but hopefully I'll try and cover off the main subjects and points for you today.
Well, I think you mentioned sort of the big conversation there, which was transparency about what the pay's made up of, and looking at what's been happening in the press at the moment about the BBC investigations into umbrella companies, which highlighted the Filipinos situation, which is obviously quite damning. How do you know you're working with an umbrella company that is compliant with the UK laws with regards to pay and charge and tax to make sure that you're compliant with the HMRC?
Yeah, well, there's a number of things that can be done and should be done from an agency perspective. So what we're starting to see now and have done over the last several years is more agencies working with what's called a PSL, so a preferred supplier list, and or an ASL, approved supplier list of payroll providers. Now, more agencies are moving towards kind of working with accredited payroll providers, i.e. someone has come in to audit the payroll provider externally to make sure what they're doing is correct. Now, that is a big tick in the box for any agency, but it's also worth noting just because the payroll provider, an umbrella provider, doesn't have an accreditation does not automatically mean they're non-compliant. That's a bit of a myth in our industry. It just may be a case that that payroll provider doesn't want to pay the fee to be accredited because they come at a big cost. So what I would always suggest to any agency, regardless of whether you're creating a PSL or an approved list based on an accreditation, every agency should, and end clients should do their own due diligence on that payroll provider. And they should be looking at things like the employment contract that the payroll provider is issuing to the individual contractor. But the most important bit, and it is quite complicated, the umbrella payroll rule, but it shouldn't be as complicated as it's sometimes kind of made out to be. So obviously the income that is received by the umbrella provider is inclusive of the contractor's PAYE rate. It includes the holiday pay, and it includes the employment costs that would need to be deducted and paid to HMRC. And the employment costs will typically be employers and apprenticeship levy, and pension contributions. I think sometimes there's a lot of confusion around what is my rate made up of. And quite a lot of time it's because there hasn't been transparency or good communication across the supply chain from the recruiter, because they don't understand how umbrella works, and will quite often go, your rate is £15 per hour, £20 an hour, £500 a day, but don't actually explain what your rate is made up of. And obviously that causes a bit of distrust, annoyance from a contractor, because they don't fully understand what they're going through. But what I would suggest for any agency, when doing your due diligence, the things that you should really be asking your umbrella provider is, can I have a copy of a pay slip? But more importantly, can I have a copy of the HMRC submission that you've done on RTI reporting? Because that will show that the income as you as an agency have provided to the umbrella provider, to what the actual umbrella provider has deducted. So HMRC already have all the information that need to kind of clean up our sector. It's just a case of don't really have the resources, or haven't put enough attention to doing it. So as an agency, you will have to provide quarterly intermediaries reporting, which shows everyone that you paid that you haven't paid directly through your own payroll. So all your umbrella providers, whether they go CIS, umbrella, limited company, whatever it may be. If you then match that up with the RTI submission that the umbrella provider has, it will very clearly and very quickly indicate whether there's any kind of gaps in payment and deductions. So there is a lot of great work that's been done by the likes of Professional Passport, talking to HMRC, where they're trying to share the flow of RTI reporting down to, umbrella providers back to the agency. So very quickly, you can see whether someone is actually making the correct deductions. So that for me is probably the most important thing. So regardless of whether a payroll provider has an accreditation or not, is actually getting a copy of the RTI submission, a copy of the bank statement showing the funds leaving you as an umbrella provider to the contractor, so you can see the deductions are made. It's actually not as hard as you think to kind of see where something is not right. Quite often, it's quite quick to see with the take-home pay. So anyone who goes PAYE, your typical take-home pay will be anywhere between 60% and 70%. That's regardless whether it's agency payroll, whether it's umbrella. And obviously, the higher your net pay, the lower your net pay will be depending on your tax code, what rate you're earning, your tax-free thresholds, etc. But anyone that's advertising or promoting, 80% plus take-home pay, you can pretty much bet your bottom dollar something's amiss. Is your pay being received in two lots of payment from two different entities? All your income from an umbrella provider should come through the one payment, the one pay slip, through the one entity. So RTI submissions, getting copies of pay slips, getting copies of bank statements from the umbrella provider in real time, based on the contractors that you're paying through them, for me, it is more important than an accreditation, because that will actually show the reality of what is actually happening.
So what we're saying then really is what our agencies should be doing is asking the contractor or temp for a copy of the pay slip, so they can actually see, has it come from Compass or is it coming from ABC company, etc., and then trying to find out where that company is, because obviously there's one of the loopholes that the BBC discovered, and ensure that everything's compliant. I want to come back to that, actually. I'm going to come back to it, but I'm going to flip it back to Simon at the moment, because obviously when we're talking about paying people and factoring people, we're talking about factoring and CID, and who uses what, why, and when is a real sort of question about what people should be using. Should they be using factoring or CID or CID?
Yeah, okay. So factoring and CID, confidential invoice discounting, invoice discounting, ID. There's so many jargonized different names for it. So in essence, factoring and ID, the easiest way to differentiate the two is that factoring has an assignment notice on the bottom of the invoice. So when the agency raises their invoice, they would, whoever they're using, ABC Factoring Limited, they would add the assignment notice that says, look, this debt has been assigned to ABC Factoring and you need to pay them back in essence. And this is factoring is normally used for the sort of at the start of going funding only. And then confidential invoice discounting is what it says on the tin, really. It's confidential. And what happens is that there's no notice of assignment on the bottom of the invoice. So when the invoice is raised by the agency has a trust account with the funder, but this account looks like it's the agency's account. So it's ABC Recruitment Limited. So when those invoices get raised and sent to the client doesn't actually really know that there's a funder involved. So there's no credit control, there's no chasing, there's no statement. So in essence, from the client's point of view, there's no sign of a funder in the background. And where this works really well is certain sectors, construction especially, clients say, look, we won't work with you if you work with a factoring company, you can't assign the debt, etc. So when you have an ID arrangement, that's the kind of loophole that you are kind of still funding, but your client doesn't know that you are, and that works well. The problem or the disadvantages with invoice discounting is that there's probably more administration. So because it's confidential, it's based on a bit more of a trust basis. So the funder would want you to do month-end reconciliations, etc. So there's quite a bit more administration work. So we often see people using ID when they're a little bit of that next step ahead. They've got a finance manager, they've got a financial controller or an FD or something like that, and they can actually use it. Factoring companies don't like giving invoice discounting facilities to people from day one. They kind of want to build that trust and know that business is a proper business. So the difference really normally is factoring, credit control and assignment notices on invoices, but no reconciliations, live ledgers, simple. And then ID is that next step that's a bit more confidential. And we see it's normally led by the end clients. If there's no issue with assignment by the end clients, you could see agencies use factoring for the rest of their agency career, I guess.
So we see quite a lot of things when we're talking to clients, when we're out talking to clients about what they're doing with their factoring companies and working with their factoring companies. And what we suddenly find that a lot of clients are finding hidden costs, hidden issues, their money's been held in accounts for various different reasons. How do you detect a funding company that's ethical and where there are no hidden costs, or where all the costs are actually open and out and everyone understands what's going on? Because certainly I inherited a company that had signed an agreement and the costs that were hidden were unbelievable. So it's quite an interesting, fact that happens constantly in the marketplace.
It's a good question, because actually not many people are aware of it, but the invoice finance industry is not regulated, and it's actually one of the only industries in the sort of the finance side of things that isn't regulated, because it's business to business. And they've always been talking about it, I think probably in the next 3 to 5 years that we will become regulated, and absolutely so we should be, because anyone can sell it, anyone can talk about it, and there's so much to invoice finance. So what would the normal things you'd look at? One would be a lot of the bigger players are part of some of the groups, so the ABFA, UK Finance Associations within the industry, so worth looking out for that. From a point of view of extra fees, it's a bit of a myth. Everyone's a lot of the facilities are sold off. There's absolutely no extra fees, one bundled fee, that's it. And actually there's not many funders out there that have no additional fees at all. So it's kind of sold as that if you do everything by the book and nothing happens and no debt gets aged, nothing goes over here and everything's perfect, you won't pay, and you won't often. But the problem is that recruitment's not straightforward, and that there are debts that become late. There are disputes on invoices, etc. So pay and bill funding, normally a lot less extra fees because they bundle it into that one sort of chunk and that's it. But there's normally some. And then with factoring invoice discounting, there's normally a sheet in the contract of additional service fees. And we're just looking at a large deal the other day, and they same day with an invoice discount, same day payment fees for £35. And this agency was taking 4 same-day payment fees a week because they were doing 4 payrolls a week. So that was £140 a week of same day payment fees. So over 52 weeks of the year, it was an absolutely mental amount of money. So get the additional services sheet, look through it before you sign it. They are normally there, but the amount of agencies we see that just sort of sign because they're rushing, they need to meet payroll. Look at that and see what's there, and do compare. I think we spoke about this just before, but the market's really buoyant at the moment, and the reason is because a lot of the lenders have lost a lot of their debtor books because of COVID. So they were lending £100 million, and then suddenly COVID hits and they've lost 30-40% of their funds out. And actually they're trying to fill those voids now, and they're trying to get those debtor books back up. So it's a really, really competitive market at the moment. So actually getting the best fees is probably the right time to look at it now or within the next 6 months.
To jump in on that, if I may, obviously, as a payroll provider, we deal with lots of agencies from SMEs right up to your large kind of nationals, and we're certainly seeing a bigger increase in small new startups in the recruitment sector, and obviously they need the funding side of things. And one thing we've found is where they have used it in talking about the bill and funding before, it actually really drives efficiencies for paying contractors because you have multiple ways of paying them. But also what I'm also getting a lot of agencies asking us, can you as an umbrella provider do the funding? Can you provide credit terms? And there are some umbrella providers out there that will do it. However, I would act on that very cautiously. Unless the umbrella provider, they're not in the business of lending money. They're in the business of engaging, paying, and looking after contractors and giving them their employment rights. So where an umbrella provider is offering credit terms, just understand how they're doing it. Are they doing it out of their own funds, the VAT money, which is quite often the case? And that leaves you very much exposed and the umbrella business exposed. So an umbrella's margin is typically the money that they make is anywhere between 15 and maybe kind of £20. Some charge a little bit more, some charge a little bit less, but that's a very, very small amount of margin that an umbrella provider is making. So an agency will be making, I don't know, an average of 10-20% on a contractor. Ours in comparison is tiny. So if we're taking a £15 margin and we're lending £10,000, £50,000 in a week, the maths don't add up, and you've got to ask yourself the question, how are they doing it? So in grand scheme of things, I would always suggest to any kind of agencies asking me around funding is I wouldn't necessarily get it through an umbrella provider because it's not their speciality, and you're actually exposing yourself to risk that financially they can't control it, and the VAT money catches up with them and they go pop, and then suddenly contractors don't get paid and someone's left with a big bill. So I don't know, that's something, Simon, you come across quite a bit.
Yeah, we see it happen more often. I guess the issue that we see that when agencies start to use their umbrella for credit is that they don't often pay for it. So then when they're actually, the umbrellas often calling me saying that these guys need a funding facility, we can't cash flow it anymore. And actually they then have to pay a cost for it, and it's flipping it across. But the problem with an umbrella crediting the payroll is that there's only so much there, whereas invoice finance is based on the actual the invoice. So each invoice is funding created against it, whereas with an umbrella they're not actually funding it against that invoice. They're just kind of got a pot of money that hopefully will go as far as it will go.
Yeah.
So when we look at that and we look at those sort of type of things as hidden costs, I know, Paul, you were working with a client probably about a year, 18 months ago. I won't mention the funder that was involved, but they had 100 plus contractors or temps on site, and they pulled the funding.
Yeah,
and that caused your client a massive issue.
Yep.
Just explore that sort of situation, and then sort of look at both from Ashley's side and Simon's side, how they would sort of avoid that thing happening, because that will happen to quite a lot of agencies because A, they haven't read the terms and conditions, and B, they may have got themselves into a situation that becomes untenable to a certain degree.
Yeah, I mean, just to give some background, my client had best part of 200 temps, PAYE temps, working for a particular organisation, and the funder decided that they would no longer get involved because the credit rating of that particular business had dropped. There were reasons for it. If I couldn't broadcast the name of the organisation, if I did, you'd be amazed that they were prepared to walk away. But it left my client in quite a pickle. We managed to find a way around it, but it was pretty hairy, to put it mildly. And it would have meant that we would have had to have stopped supplying, which would have been a disaster for my client. Anyway, we found a way around it. But the fact is that this was completely unexpected. I think that, to Howard's point, guys, how do our clients, how do recruitment businesses make sure that they're going to be fully supported through the good times and the bad by a provider, and not left, as my client was on this occasion, absolutely stranded and in dire straits for a period of a few weeks?
Yeah, from quite a few things to that. From the credit point of view, just in the detail of that, we've had massive issues with that over the last year, sort of credit lines being pulled, and that hasn't really sort of sat with any specific funder. I've always been an advocate for recruitment businesses using some sort of credit protection, bad debt protection, and a lot of the funders include it as part of the package, because obviously, as Ashley said, these agencies are making 10-20%, but if they're putting 100 grand out the door, they've only made 20 of that. So if that 100 grand goes pop, there's a big problem there. So I've always been a true advocate of bad debt protection. And obviously when COVID hit, all the insurers, we know the Euler Hermes, the Atradius, the QBEs, they all panicked, because obviously they're insuring debt for not a lot of money, and what's going to happen with the economy. So 12 months ago, it's absolutely, and there were limits getting pulled. And then because the bad debt protection limits are getting pulled, the funders are going, oh, I can't insure, I don't want to fund this, because if it does go wrong, what's going to happen to us? Because we're not going to be able to recover that money. And so I don't think there's anything specifically that's just kind of where it's been, and it's hopefully getting better. What I would say from a reputational point of view of the funders is that the internet says a lot. So Google reviews, FIFO, those sort of things, do look into these funders. Have they got good reviews? Have they got bad reviews? And talk to someone independent and outsource someone that you've actually, another business that's used a funder. The flexibility is key. And I guess the last strand to it, Paul, is if you don't have to, try not to tie yourself in for too long. We see too many agencies that say, look, I'll get the best deal, but I'll sign up for 18 months, 2 years. And my personal advice is actually, well, it might be great now, but what happens if exactly in that situation, Paul, the limit gets pulled and you've got 15 months of a contract left, and the funder's saying, no, you can pay my exit fee because I haven't breached my agreement. So try and keep contracts or notice periods or break clauses. There's some really good guys out there that are offering sort of trials and rolling contracts and things, and do take that into the equation when you're comparing it for fees, etc.
Simon, so I mean, I think that I'm not going to, without wishing to sound controversial in any way, shape, or form, I think everybody listening, in all of us, could give examples of certain umbrella businesses, for example, rocking up in pubs to talk to consultants, to look after them in inverted commas, to ensure that their contractors were being placed in their direction. I mean, to be honest, I think, unfortunately, and I'm not suggesting this of all businesses in your sector, but the industry has a bad rep in some cases. I mean, it's in some respects, the view about you made the point yourself about being unregulated. Is something that has been brought to the fore, not least by certain politicians recently. So, where are we going in the industry? Where is the industry going now? Do you see it moving into that regulated space? Do you see the future of your industry now getting placed under scrutiny, becoming sort of tighter regulated as we go forward?
Yeah, I think invoice finance funding, especially in the next 5 years, there's going to be more regulation sort of around the way it's sold, and the a lot of the additional fees and the things that are in the contract that sort of come to fruition 6 or 12 months time. I think it is, and I absolutely think it should. And there are providers that are taking that into account, and things. I genuinely think sort of the last 5 years, there's been a lot more transparency than there was probably 10 years ago.
So if I'm an agency owner, how do I decide on the most ethical, best regulated businesses to work with me? Who do I look to give me the advice, the direction, guidance to select the right supplier for me?
From a finance point of view?
Yeah.
I say for the larger organisations, the boards are good. The ABFA and the UK Finance, these associations that have joined and that are part of those things. So that's probably a good point. And I'm still a true advocate on actually people that use people and hold them in high regard. You often see sort of posts on LinkedIn, who do you recommend for invoice finance, either using a good invoice finance broker, or actually just getting some good recommendations and seeing the name that comes up a lot. And there are some good ones out there.
So do your research is what you're saying.
100%.
Be very careful, do your research.
What we see with recruiters too much is that everything's often a rush. So it's with some of the new starts, I placed a temp, oh my God, I didn't even think about this. And then suddenly they're ringing me or they're ringing the funders, I need it yesterday. So instead of doing that research, they're acting on, they're just acting on the back of literally straight away. So the advice is that if you're a new start and you're thinking of ever considering the temp market, look at it now, have a chat about it, even if you're not looking to place and you don't have to commit, it won't cost you anything. And if you're looking to review it, block some time out, block 2 or 3 weeks out, talk to more than one provider. The biggest mistake that people make is that the sales guy comes in, and there's a lot of nice salespeople in our industry, and they sell the dream and they often do a good job, but actually talk to 2 or 3 people, have a Zoom. It's easy enough to sort of do it with 2 or 3 different funders and get that gate, and talk to the people that are running your facility as opposed to the person that's selling it to you. So your day-to-day contact of who you're going to be talking to in the office, and they're the people that are making the decisions about your funding, etc. So talk to your client manager or your relationship manager before you sign that paperwork.
I think that's great advice, Simon. We talk to our clients.
Paul, can I just jump in, Paul, because we've got some questions coming in from the audience. So before you get into that sort of from there, one of the questions that's been asked is to Ashley, which is regarding how often should you audit your payroll, your umbrella company, and having a CID document helps umbrella companies get better press from the agency temporary workers, but talk about various certain things about housing associations, etc. So I think the question is, which I want to tie that into, Ash, is how do you know the umbrella company is ethical and the candidate is getting treated both ethically and lawfully when they're being paid?
Yeah, there's 2 very big differences between being paid compliantly and working with an ethical and transparent payroll provider. I think a lot of the noise, which is probably why we've had these questions, is around, yes, this payroll provider's got an accreditation, that's great. Again, I'm getting issues around service levels or contractors not being paid as holiday pay. That's one that's been in the press quite a lot recently. Obviously, the funds, for example, that an umbrella is provided includes, as I mentioned before, the PAYE rate, the holiday pay, and the employment costs. So, and that includes the pension. Now, I have seen it, unfortunately, where people are holding back the holiday pay. Even contractors going, "Can I have my holiday pay?" And the provider's going, "No, you can't have it," for whatever reason. And ultimately, any ethical employer, whether it's agency payroll, whether they're going through umbrella, that holiday pay element is not yours. It is the contractors. It's theirs. I'm not a big believer in people going, "Well, if you don't use it by the end of the year, you lose it." A decent umbrella provider will do 1 or 2 things. At the end of the year, go, "We're going to pay out whatever holiday pay you accrued, so it's yours." Or when you get P45 because you've moved on to assignment, you move away from the reason, you then pay out the holiday pay. So it's really important that even though you've got that accreditation ticket, really understand the processes that the umbrella provider is actually undertaking. Ask them, how are you operating holiday pay? Now, most umbrella providers, when it comes to holiday pay, will offer the contractor 2 choices. You can have it advanced. Sometimes people call it rolled up. And that's probably what 99% of contractors would typically do. So they get the holiday pay as they go along. So it's always sat with them. The umbrella provider is not holding it or accruing it. They also do offer, as I mentioned before, accrued holiday pay. So kind of a bit more like you would be as a permanent employee, full-time employment. But it's really important to understand how that umbrella provider is operating around pension. Are they making contributions? Are they trying to split the pension contribution back to the agency? If the payroll provider is not, the contractor hasn't auto enrolled, so they've opted out. So there's a lot of things where people are taking certain funds that they're receiving and splitting it back either with the agency or keeping it themselves. Ultimately, if it sounds too good to be true, then it is within the umbrella world. You know, tax is tax, holiday pay is holiday pay, pension is pension contribution. You know, that is not the umbrella provider's money. In terms of how often should an agent audit a payroll provider, it's a good question. I would typically say at least every quarter, if not every 6 months. It doesn't need to be, I need to come and visit you and do a big internal audit. That's always a good thing to do. But obviously, quite a lot of SMEs are not going to have the resources. Are not going to really also know what should I be looking for. You know, I rock up to an umbrella provider and they'll be like, oh, what do I actually look at? Are you compliant? Yeah, we're compliant. Oh, great, fantastic. Compliant. And again, it goes back to there's some very simple things you can do outside of just looking at an accredited payroll provider by asking for the RTI submission, the bank statement that they've sent, you know, with deductions made, etc. That's very quick and very easy for a payroll provider to provide to an agency. Now, what I'd always be careful is just relying on a payslip, just relying on an Excel spreadsheet to show that you made deductions doesn't tick a box. It's very easy to forge, manipulate payslip. You want the payslip directly from the worker. And if you are getting an RTI submission, and I had one from an agency who provided me where it's literally the provider had just put it on an Excel spreadsheet. Well, that's not your submission. That's just a bunch of numbers that you put on an Excel spreadsheet. Great, anyone can do that. You want the screenshot of what they've actually submitted. And that way you can really see what deductions have been made. So audit, I would say every 3 to 6 months. And what most agencies would typically do is going, here are 5 contractors, 10 contractors that we paid over the last, you know, several weeks. Can I get a copy of their pay slip along with the RTI submission, along with the bank statement, and hopefully it should all match up along with the intermediary reporting that they've provided. And then if there's anything that doesn't look quite right, that's probably a red flag, or you want an understanding of why it's, you know, doesn't match up.
So that's an interesting sort of view when you sort of, that ethically and legal side of it and getting them both right. And that is, again, it's about investigating your umbrella company, but it's also about educating the temp and the contractor who might have their inverted commas, their umbrella company they want you to go through, but understanding that they may be paying you unethically, etc., is also a good way of talking to them about how you can provide best service to them and what's going on with that sort of on that front.
Exactly. What we see is obviously you've got 2 things. You have an agency that typically will have a PSL or an ASL. I'm actually a big advocate of agencies having both. So as an agency, you have a preferred list of payroll providers that you've vetted, that you trust, not just from a compliance perspective, but from a transparency perspective, but also from a service perspective. But however, the reality is contractors will work through multiple agencies and they may be through an existing payroll provider. And just because they're not on the PSL, does that automatically mean that you shouldn't allow that contractor to be paid for their current payroll provider? In my opinion, if you've done your DD and they're accredited and you know that they're one of the, you know, the good compliant providers, you should allow that contractor to stay with that umbrella provider, because the whole point of umbrella is that they have that one employer. They can take that umbrella with them from assignment to assignment, workplace pension, the tax-free allowance, so on and so forth, building up their continuity of employment. It helps with mortgages and loans. So I would always advocate PSL and an ASL. Now your PSL will vary in size depending on how big you are as a recruitment agency. So your very large recruitment agencies may have 10, 15, maybe 20 payroll providers and an ASL. A smaller agency may have 2, 3 preferred providers, but then a bigger ASL of an accredited payroll provider as an example. And that's something I strongly advocate, because it's so important to protect your candidates. You want your candidates to have a really, really good candidate journey from the point that you first engage with them and talk to them and explain why you're great as a recruitment agency and how you can support them, to the point you place them on the assignment, but more importantly, when you actually get paid. Now, if anything goes wrong, more people are, you know, money probably what everyone's doing this for. You know, they're not doing it for hugs. We're not doing it for hugs. Agencies aren't doing it for hugs. So the money is obviously why they're going out to work. So making sure they fully understand how they're getting paid what the deductions are so important. Now, what you will find is obviously certain contractors have been and are used to going through non-compliant providers, tax avoidance schemes, sometimes knowingly, sometimes, to be honest, quite frankly, unknowingly. And if the take-home pay is different on illustrations, they shouldn't be. So an umbrella illustration, and so when obviously a contractor speaks to an umbrella provider, they should be providing, this is how umbrella works. These are deductions that will come out of your income. These taxes will go for the employer's deductions. This is the employee's bit. The only difference in the net pay from one compliant provider to another compliant provider should be the margin that they're charging. So if any two providers are providing illustration where it's dramatically different, that's a red flag. Now, it doesn't necessarily mean they're always non-compliant. It might be that they're inflating the illustration because they've included expenses on it, or they base the tax-free threshold over 48 weeks instead of...
Just to interrupt there, Ash, because we're obviously running slightly on time here. What you're saying there is that there is a certain standard that the HMRC is looking for. I understand that you've got a document that explains that, and so if you'd be so kind, if you could send that document out to people who've attended the webinar so they can understand that and get that. I've got one last question that you'll go back to Simon, which I think I know the answer already. Some of it will be about the legalities of the contract that you've signed, but the question is it best to switch providers from time to time or stick with the same one?
It's a great question. That I'd always say, is it best to switch providers time to time? No, not necessarily, but is it best to review the options from time to time? 100%. So finance market is changing considerably, software, technology, etc. So from a processing point of view, important to see what else is on market, and actually important to review to make sure you're not overpaying and it's working line. So even if you're happy, I do say to people, even if you're happy, worth looking out there and seeing what's around and what's available, what's different, and if you're paying the right fees.
As you said earlier, it's worth doing that early rather than when you get to the end of your contract and it becomes a rush then just to sign your contract to make sure that you've got the facility in place.
I would say 3 months before your contract's due, and I would say every 12 to 24 months you should definitely have the conversation, even if it's just a quick conversation to benchmark.
Brilliant. Ashley, Simon, it's been a very interesting understanding of finance and umbrella. I'm sure there'll be lots of questions still being asked regarding what's going on within that marketplace, because there always is. Next week, we're going to talk about AI and automation and how we can bring that into the marketplace and how that will expedite your recruitment processes and save you time, money, and give better value to your clients, but give you better opportunities. So Simon, Ashley, thank you very much for your time. It's been much appreciated. Guys, thank you for Jump. Guys who've been listening, again, thank you for attending, and we look forward to seeing you all next week.
Thank you, everybody. Thank you. Thanks, Ashley. Thanks, Simon.
Take care, everyone. Bye-bye.